right, good morning, everyone. Welcome to the Sensa Edge. This is Zoheb here, founder of Sensa. In this podcast, we're going to discuss latest market news, movements, and how best to trade them. This podcast is your ultimate trading companion, delivering actionable insights, market trends, and powerful option strategies straight to your ears. We got like plenty of option strategies, 100 plus pre-built option strategies. Every day in this podcast, or Tuesday, Thursday, we're going to talk about different strategies. We're going to educate. We're going to get some actionable insights every time we're going to start. We got two things to cover today. One, we're going to talk about the latest congressman trading, the politician trade, and then let's jump and learn one of the actionable trade, which is going to be called vertical spread. I'm going to bring up my screen here in a minute, and then let's jump right in. Right, I hope you're able to see my screen and Sensa Market. What happened recently in the politician trade? So in the Sensa Market tool, if you go, you got plenty of features and tools right here. Trade, option strategies, chains, flow, institutional, politician trade, and insider trade. So this has been like a good kind of a thing on the politician trade, which has been coming in. Congressman Josh had reported that this number of trade, which kind of like got some attention and news, which kind of like gives you a little bit of like details, like what's going on in the politician trade and like how and why are they buying. Again, we are not suggesting this is a good trade versus not a good trade, but you can make your own decision on each of the congressmen coming in. But the platform here kind of like shows each of the politicians what they are trading. This is a transaction date here. If you can see in the screen, all the recent trades coming in from different politicians across. So what happened yesterday is Congressman Josh Gottheimer reported all this on yesterday, Jan 14, or 2 days before Jan 14. All the transaction date happened somewhere around close to end of the year, December 27th or so. Few things catches some attention, especially if I actually jumped right into a details here, specifically on the congressman. I see a lot of purchase on Microsoft. Close to like this been like separately it's broken down into like up to 5 million purchase on Microsoft stock options. So there's 5 million, up to 5 million here, 5 million. There is a sale, stock option of sale of Microsoft, same thing, and so forth. So if I just combine here, this approximately around like up to 40 million of stock option trade on Microsoft, which went in by the Congressman Josh, which he reported like 2 days before on Jan 14th. Again, the platform is all about helping you traders to kind of like know what the politician is doing, kind of like bring you the attention as needed. And this is nothing but the trade volume by year, which has been traded by this congressman. You can actually go back to the politician trade and then jump into each of the different politician to kind of like get some specific details. Again, they got 45 days right from they do any transaction until they report to the SEC. That's where as soon as they report to the SEC, we are able to bring this particular report and put this into the dashboard view for you to kind of see and make some actionable trades if needed, or you can follow them, you can copy the trade, what so be it. All right, now back to our second topic today, which we're going to cover is on the option strategies. We got like bunch of option strategies over here. Today we're going to take like one specific stock, kind of like deep dive into why we are picking that particular stock and what strategy would work best for that particular thing. Today we're going to talk about the Chinese ETF FXI. Chinese marketers have been, let me bring that up right here in the screen in a minute. Right. So yeah, the Chinese marketers have been beaten up since the beginning of 2021. If I go back and then look at, if you can see the graph here, right from the 2021, it was at a all-time high of somewhere around, right, 2021, the peak somewhere around $54. It went down. It was down to around $20 at the peak September 2022. And somewhere now it's hovering around $29. It had some ups and downs, but overall, the rally between $38 to $29, FXI is still about roughly 40% of the highs and presents a great opportunity for a bullish trade. Again, before going further, I should point out that China is not the only country to be hit hard. India, Brazil, Mexico also have taken the lumps as reflected in the respective ETFs. It seems the S&P 500 is the one of the few names left that has yet to experience any significant correction in the recent times. All right. Again, let's before I jump into this particular FXI, again, if you're interested in any other ETFs like the Brazil ETFs, which is FLBR, you can certainly consider that. There is FLMX, which is nothing but the Mexican ETF, which is there. We have the Brazilian and the India one, INDA, which is the Indian ETF. You could also use any of the ETF or stock that you prefer. This particular strategy is not limited to one name or the other. It's just a bullish strategy that a trader can employ for a longer term bullish trade. All right. Again, what strategy are we speaking about? We're going to pick a simple two-leg debit strategy called call vertical spread for this. I'm going to jump back to what we're talking about, the Chinese FXI. Assuming, again, back to the Chinese FXI, what we were looking at the previous stock screen, a long-term horizon there is a number of ways to express the thesis of Chinese rebound rally. But in this case, what we are going to use is a long call vertical spread. As far as the time we can manage. In this case, this is where all the expiration dates is. When I load it up here, you can see what particular strategy. If I want, I can flip to a different strategy, bear put strategy. I can go back to a simple long call strategy. The expiration dates, as I change, I can adjust the strike prices accordingly, and my profit loss potential is easily visible right here in this particular strategy screen. I can go ahead and hit the place order button. Again, let me go back, and then what we're talking about is the bull call spread. And why we're going to talk about this and why we are picking this strategy, I'm going to tell that in just a minute. What we're going to do here is I'm going to take this back and then go all the way to the end of the last expiration date, which is like out in Jan 15, 2027, which is roughly 730 days to expire. Again, right? So there are two things here, right? You are buying a call and then you are selling a call. The long call vertical spread involves this two option. In this case, what we're going to do is we're going to pick like $38 call for buying, and we're going to roughly around $40. Let me adjust the range here. As I do that, I'll be able to see clearly the profit loss potential. In this case, I can do a 40, or even I can expand to $42. Here, what I'm betting here, hedging at the same time, I'm capping my maximum loss at a specific debit price, which I need to enter. As we saw in the previous graph, again, the Chinese ETFs is still around $29, and we are betting that Jan 15, 2027, it's going to be like certainly more than $39, which is a break even right here in this particular strategy. Anything above that is where I'm going to be making a profit. So in this case, if I am doing a $38 buying a call and $42 selling a call, I need about $120 to enter this particular debit spread. And the profit, if I am right, which it's going to play out in the next couple of years, if I'm right, it's going to be making a $280 profit in this particular case. This is where the profit lies. Again, why I'm choosing this particular strikes that puts us past a prior high into the rebound territory. If FXI breaks through its prior high, that would help us cleanly at 38 level with smooth sailing all the way to $42, $44, or maybe beyond. As I said, a vertical spread is both buying and selling right here, right? Again, it's important. Both the things has to have the same expiration date. If the expiration date is different, then it's going to be a different strategy, which is nothing but diagonal spread. Going to take a quick few seconds here. Look through the screen here. This again, the Greeks. We're gonna talk about different strategy, but again, coming back, right? Why it really works. Again, there's no perfect strategy or anything, right? We think that this is a bullish long term. The risk reward ratio is still manageable. It does offer a lower level of leverage than a shorter term call spread. The longer dated variety here is some appropriate when you assume or unsure about the timing of the move you are expecting. If you expect the move in a shorter period of time, it makes more sense to do a shorter dated call spread, which will be much cheaper and have a better risk reward. But in this case, we are going for the entire 2 years for our thesis to play it out. A trader could also opt to take a profit early, right? You don't have to wait like by waiting FXI to reach $40 level, or if the trader or you have enough conviction, he or she could hold the trade all the way until the expiration to get the full profit. Again, to recap, the short call offsets some of the cost of the long call. The time horizon here in this case is extremely long, given that this is plenty of time to be realized. The optimal risk reward yields a great return if the trader is correct. This is one of the example of one of the bullish call or a call vertical spread, which you can name it, or either one, whichever you prefer, and then play this out. In the upcoming podcast, we're going to talk about different strategies, pick different particular sector, different companies, and then also go ahead and place those things. Again, in this case, if you still want to go ahead and place those things, you can tap on the place order button. You can connect to the Tradier brokerage and immediately you can execute the trade right here. Right. That's pretty much our topic for today's podcast. Again, assuming that Chinese ETF FXI will rebound from its low and begin a sustained rally, we can call it a long-dated call vertical spread to express that view. Next time on Sensa Edge, we'll dive into the bearish trade and how to exploit expanding volatility. Be sure to subscribe, leave a review, and follow us on the platform. Thank you for watching and have a good day. Happy trading.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.